this resilience that we're seeing in Chinese stocks amidst all these external factors, whether it's a hawkish Fed, stronger dollar, is that going to be remaining in place for the rest of the year?
In our view, at least, I think the worst is over. So currently, like from macro side, and then we can say like starting from May, the activity actually rebounded evidently from the April, thanks to the easing lockdown restrictions, like for some cities like in May. And also the situation will continue to improve in June because Shanghai largely unlocks like since like June 1st. So we think like for the production side, like it's a gradually like a recovery, and that supports the supply chain. For the consumption, is still slow, and we still have the negative growth, but like starting from the second half, and we think like it will rebound. From the like a stock side, I think that it has been like muted for a while, and given its attractive valuation, and also like now relatively abundant liquidity, and also recovery of the economy, I think that will give some support like to the stock market as well.
So with the housing slump, I wonder, where is that money going? If people are not spending money and investing in a home, does that go back to the equity market?
We see like yes, currently like for the real estate side, we see the both like for the sales and for the new start, and also for the buildings under construction all drop like over 30 to 50%. So I think the sentiment for the real estate is still quite low. We don't think the household will rush to the real estate market at least in the short term. Although the government relaxing the restriction on purchase. For where's the money go? That's a very good question. I think that currently for the stock market, I think it's also quite cautious, for many of the investors. Although for the Chinese economy is rebounding from the trough in April, but I think that for the recovery road is still bumping. But already the market sentiment is largely improved. So currently, I think the hold, wait and see, the sentiment is pretty high. So I think the more policies should come out to push up the consumption side.
What do you think is behind this rally? Is it really mostly just liquidity driven, Yifan, or something else?
I think that also for the valuation is attractive, and also production is a recovery. So currently we are still positive, for example, for value sector, and also for the energy sector. So currently we see for the first round, we see some of the energy mining sectors rebounded, is rebounding, and also we see some select names of the banks, and also for the tech side, and we see it's actually outperformed the market for 2 to 3 weeks. So that's because the market expected the worst regulation, at least the regulation storm has already passed.
Obviously, we've seen A shares buck the trend amidst what's been going on outside of China. I'm taking a look at when it comes to MSCI China. It seems like consensus is that for these target prices are going to be at 96 or so. But the gap that we've seen with target prices versus where MSCI China is still quite wide. Do you think the targets are still too high at this point, Yifan?
We still have a half year to go. I think the road will be bumping. But we're still thinking this year, China could give the market a surprise, because now I think that with the high inflation in the U.S. and also with the continuous aggressive Fed hikes, as well as for other central banks, for China's case, the policy is quite supportive. For the monetary policy is relatively relaxing. So I think and also economy is recovering. So I think as long as there's no prolonged city-level lockdowns in the second half, we are more positive for the China's markets to continue to rally.
For dollar China, is the risk still to the upside for renminbi now?
Currently, renminbi is a relatively stabilized, relative to dollar. Although the dollar is hike more aggressively, So we think it's possible, for the RMB continue to weak against the dollar, given the strength of the dollar. But we think it's largely stabilized because for the economy, actually now the market is more confident for economy, and also we see for the trade surplus actually is beat the expectation. We think that could be the situation for the coming months. So that's also gives some support for the CNY as well. So we still think, it's more like a fluctuation for the second half. Don't have a clear trend for depreciation.